Let's start with GDP. We, as Steve said, we've slowed, but it's not a slow economy. Do you think the Fed is in a weird position to be thinking about cutting here?
I don't think it's that weird. I think it's slowing, and so the Fed, they're either going to cut now, which they probably are going to do, or if they don't, I think the market pressures on them are going to be really high to cut. To me, the irony is that the only thing preventing them from cutting, I think, is that the president is out publicly haranguing them that he wants them to cut the interest rate. So every time they go in and say, hey, maybe we should adjust it down, at least it has to raise in their mind, yeah, but do we want the world to think that we're just doing what the president is demanding of us?
Alex, you like this GDP number, about what you thought?
I do. I think that it's a solid number. Obviously, the inventory piece just creates a little bit of volatility, and the investment numbers are a disappointment, but not a surprise. But overall, we see strong consumers. On the Fed, I'd agree with Austan. I mean, what the Fed has to do now more than ever is try to block out the political noise, focus on the data, and make the best call to boost their credibility here, or sustain, I should say, their credibility. What they do in the face of this number is a challenge a bit.
After the last recession, if you look at the July 2009 to the date that Donald Trump takes office, the GDP grew about 2.2% a year. And Joe, you and your friends spent that whole time saying 2.2% is pathetic, it's horrible, look at how slow the growth is. Donald Trump's first year in office, the growth was 2.2%. We have 1 year of sugar high from the tax cut, and now we're back down to 2.2%. And you're telling me that it's great.
Well, we'll see. Obviously, nobody knows the future. The depth of that recession, if it was a different type of recession, fine. You can say we didn't deserve the Reagan-type numbers out of that deep recession when you had much higher. You almost had a spring-loaded recovery. We had none of that, and I think it's because of all the stuff you were finagling with, Obamacare and regulation and everything else. So, Alex, would you have voted yes on would the average AEI resident fellow have voted yes on the debt deal, and would the average AEI resident fellow be cutting interest rates here?
Well, I hate to speak for my colleagues. We're a diverse group over at the American Enterprise Institute. I'd be a no vote on the budget deal myself. I don't think I'd be alone in that deal. They've basically unwound a budget constraint that they imposed a few years ago successfully. Maya McGinnis and her group put the cost of this deal at about $1.7 trillion. So we're thinking about things on the order of magnitude of the tax bill. I would assume that folks are in the economics world across the political spectrum who railed against the cost of the tax cut would be concerned about the cost of this deal as well. It's a significant increase. Obviously, the problems we have with the deficit aren't focused on discretionary. It's mandatory. But that doesn't mean that we should go willy-nilly and spend blindly on discretionary
spending. So, Alex, do you see, if you do a Rorschach on this economy, do you see it the same way Austan does, that it's the same economy that Obama had generated, except for a 1 year sugar high from the tax reform? Or do you think it's more, there's some structural advantages to what happened there?
Yeah, no, I don't see it the same way. I do see that we're growing faster. We have to keep in mind that the range of growth rates that we would expect in our economy are at the low end 2 and the high end 3. So the details matter. It's not like we might have 0 or we might have 10. So growth is in a narrow range overall. We've got one quarter a little bit softer than the previous quarter, but I don't think that means that we're in an Obama economy.
Oh, God forbid. See, Austan, not everyone. You always bring, I mean, nobody was even bringing that up, but you somehow just had to stick that. That's why I'm worried about dinner. Is that all you're going to talk about is sort of trying to convince me?
I'm just going to talk about how right I was and how wrong you were, and that's going to be the whole dinner. I'm going to rent out the restaurant, keep it open extra time.
I don't know. I just remember that. Yeah, I was around for that Reagan snapback. We had like 7% GDP at one point, and we added like 700,000 jobs a couple. I mean, that was a real rebound.
Joe, I know. And when you were a kid, going to the movies used to cost a nickel.
Both ways.
Okay, that's
uphill.
great.
Both ways.
Yep.
Both ways
Movies
uphill.
for a nickel?
That was my grandma.
Yeah.
Hey, Joe,
you know what? I can
just,
still get a taco for 59 cents. So that's what you're having too, Goolsbee. What, Steve?
Just want to correct something that Austan said. He didn't he didn't know he was wrong about this, but they revised 2017. I guess you call that the first year of the
be a good revision.
Trump administration up to 2.4 from 2.2, Austin.
Okay.
The last year of the Obama administration remains that mini slowdown we had that nobody really talked about, that I think was very influential in the election of the president. It remains at 1.6. I will also point out that they revised the last three first quarters up.
Okay.
So this may be part of the
is that using
effort
your new
by BEA?
Is that to adhere to your standards for the first quarter? Did they do anything based on you?
It's getting closer. Well, we were influential in getting them to revise the way they calculated Q1. And as a result, Q4 of last year took a really big whack, as whacks go. 1.1% down from 2.2. It did not change the full year for 2018. So this happens, folks. It's very important to know. They're going to go back over the next 5 years, and they'll revise today's number, and the average size of the revision, plus or minus 1.3 percentage points.
Why do we bother?
Now, that's been coming down over time. The BEA's been doing a better job, but it's important to know we're in and around a number that's plus or minus 1.3.